Today's presenting sponsor is Datadog. If your business is being driven by software, you know today's applications are more complex than ever. They're sitting on multiple layers of infrastructure and distributed services, and it can be very complicated to manage. Datadog brings visibility into every part of your infrastructure, as well as APM monitoring for your application's performance. Customizable dashboards, collaboration tools, and alerts let you develop your own workflow for observability and incident response. And Datadog integrates seamlessly with all of your apps and systems, from Amazon Web Services to Kubernetes to MySQL, so you can get visibility in minutes. You want to get started now? Go to datadog.com/cloudcast to get started with Datadog and get a free t-shirt. Datadog is trusted by thousands of enterprises. So if you haven't tried Datadog at your company or on your side project, go to datadog.com/cloudcast to try it out and get a free t-shirt. And now, on with the show.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome to another episode of the Cloudcast coming to you from Raleigh, North Carolina. We have both Brian and I this week, and we also have a returning guest from past shows. We have Bernard Golden, CEO of Navica. Bernard, how are you doing today?
I am extremely well, thank you. Thank you so much for inviting me to come and present or speak on your podcast. That's fantastic.
Yeah, great.
Yes, absolutely. And Brian, it's been a while since we've talked as well. Have you been traveling? What's been going on with you lately?
So I've been. I think things are good. Haven't been traveling a bunch, but I'm actually getting ready to go off, and I'm doing this road show with Gene Kim of sort of DevOps fame and Phoenix Project fame. Him and I are doing this road show like 6 or 7 cities. So that kicks off later this week in New York City, and then I'm going to be traveling a bunch. So we'll fit podcasts in as possible.
Yeah, absolutely. And look for a good bit of shows. The typical format of either both of us or one of us. But we're going to stick to the weekly format even throughout the summer, with the exception of next week. It is Independence Day here in the States, and so we are going to be taking next week off. But other than that, you should still see a weekly show going forward through the summer.
Yep, absolutely. Well, cool. Well, listen, Bernard, great to have you back on the show. It's been a little while. I think the last time we had you on, you were sort of in the Cloud Foundry ecosystem. You were doing some work in that space, and so get us up to speed. What are you working on these days? What's exciting you? What types of things are you focused on?
Yeah, well, I was working at ActiveState at that time.
Yep.
And ActiveState did an acquisition arrangement with HP, and I had joined ActiveState after spending time at Dell when it acquired Stratus, a company I was at before. And I'd sort of like seen that movie and said, well, I don't want to go see the sequel. So I decided to strike out, go back to my independent work that I've been doing actually before at Stratus. And I've been doing that ever since. So I do consulting, I do some writing. I've done a lot of technology survey because one of my theses is that as cloud computing is now becoming kind of the de facto computing substrate, it really unleashes a huge amount of innovation, a huge amount of technology innovation sort of above it or on top of it or whatever you want to say. It's an innovation platform. And so I have looked at a lot of different technologies, and I'm doing quite a bit of work around blockchain now. So kind of a mix of cloud computing and blockchain across a mix of activities, including consulting and writing and working with companies and so forth. And I should mention I've also have partnered with a training company called SimplyLearn, because my view is that enterprise IT organizations this is like a hurricane hitting them about adopting these new technologies, and they need to get smart fast. They need to train at scale. So I've partnered with a training company as well.
Oh, fantastic. Now, what we really wanted to talk about today was, and link in the show notes, that a blog article you put out recently called "Cloud Computing Has Hit a Tipping Point," and we certainly agree with it. And it's something we've been kind of seeing and tracking on this show for many years. And so we wanted to really kind of take this story and get it out to everyone. And so if you don't mind, tell everyone a little bit about the premise of it and the background of all of this and how you kind of came to the conclusion you did.
Sure. Well, I believe that cloud computing has hit a tipping point. It's now becoming the de facto mental model for enterprise IT organizations. And what do I mean by that? In other words, in the past, cloud computing was always sort of an exception. Oh yeah, it's okay for that group because they've got a little digital initiative, or it's okay for that organization because they need some test and dev resources. But the notion was, but our main assumptions about the way we build applications, the way we operate them, about the tooling we use to manage them, that's all on-premise virtualization. And I've seen a pretty significant shift in that, where the consciousness about cloud computing and what it provides and what it requires has now become kind of, oh yeah, that's got to be front of mind for us. We have to be thinking about that as the way we do all those activities, design and so forth. And I find it interesting because we're seeing that more and more, and yet there are so many, I don't know what you would call them, naysayers or stubborn people or whatever it is in the industry that are they kind of give it begrudging assent. They kind of go, oh, yeah, the cloud stuff, yeah, that's pretty popular now. Let's go back to talking about, basically what they're comfortable with. And, and I felt like, I don't know, I really wanted to look at that phenomenon, look at what it means when you hit a tipping point with the technology, and discuss that kind of phenomena. Because I've seen there have been other tipping points. There have been other tipping points in our industry. The shift from, assuming a LAN environment to using an internet environment. So that meant, we're not going to use thick clients, we're going to use browser-based clients. You can talk about the shift to the PC as the dominant platform. We've gone through these kinds of technology tipping points in the past, and their effect is unbelievable within the industry. And I wanted to talk about that.
Yeah. So you've obviously been involved with this space for a while. You've written things like the, public cloud and AWS for Dummies books, and I mean you've been very involved with this. Like, what's making 2017 any different than 14, 15, 16 for you, that you sort of saying like, now something is jumping out at me and saying this is the tipping point? What's that thing that sort of drove you to make this conclusion?
Yeah, so one of the things that sort of drove that is, you're now seeing reputable mainstream enterprises going, we're all in on cloud. You can look at companies like GE or Capital One or whatever they might be, who are kind of willing to stand up and go, yeah, we're all in on this. And so you guys have worked in enterprises. You know how it is. Enterprises never want to be leading. They always want to go, well, who else is doing this that's like me? And that'll make me feel safe. Well, now there's enough that basically anybody can go, yeah, like real deal companies, people I consider to be peers or role models are doing it, I should do it. So there's this sort of consciousness. Again, I think the notion that what the computing resources we should use should have the characteristics of cloud computing. So they should be like available immediately, highly scalable. We shouldn't be tied to static infrastructure. That's all permeated, and people are going, now I got to build applications like that. Where do I do that? I do it in the cloud. But beyond that, and I think really important, and this sort of goes back to the cloud as an innovation platform, these cloud providers, it's really a misnomer to think of them as being, they do infrastructure as a service, or even platform as a service where, I hand in my code and they run it. They now have complete, enormous ecosystems of services, like machine learning or IoT capabilities or whatever it might be. And enterprises in this sort of shift to being digital enterprises have to take advantage of those things, and you really can't do them yourself. I mean, it's just too difficult, it's too hard, it's too complex. And so if you say, gosh, I need to layer machine learning into my customer analysis, and do clickstream capture and do predictive analytics around it and all that, you're probably going to be driven toward using one of these cloud providers. And then, so you're sort of you by de facto of what you want to accomplish, you get driven toward using them, you go cloud it all in.
Okay.
And let me ask you this then, Bernard. So kind of the flip side of that for just a second. while we've seen incredible growth with AWS in particular in the last couple of years, those growth rates have slowed down over the last 7 quarters or so. And so you're starting to see, in addition to that slower growth of a lot of the on-premises vendors. And so do you think the two are linked together? Do you think this is just a law of big numbers? Of the bigger the numbers get, it's harder to move the needle? What are your thoughts around, is there a correlation there at all?
Well, I don't know if there's a correlation, but, I did an analysis based on the last quarter results from the big 3 cloud providers. I call them AAG, AWS, Azure, and Google. And I concluded they were probably at about a 60% blended growth rate across the revenue stream. So roughly 60%. And I guess, I think you're onto something really important, which is that growth is directly coming out of the revenue stream of the incumbent providers. And, the first thing you see when new entrants come into a market, the first thing you see is revenue growth of the incumbents. So let's look at a different one. When PCs came along, there was a whole string of companies already existing, digital, so forth and so on. What went first was, they didn't go out of business overnight, but what happened was they stopped growing. Their growth rates went from 8 or 10% or something like that down to 2 or 3, and then turned to 0. And eventually what happens is they start turning negative. And that's a sort of a tipping point. And that's what we've seen now. So as these companies, these cloud companies, the AG, are growing at 50, 60% blended, we've seen the growth go out. Now we're down to actually negative numbers for most of the big players. The next thing that you really see is profitability go, because for a while, even if you've got bad revenue results, you can tweak the numbers. We're going to lay some people off. We're going to cut back on marketing. We can still look good profitably. Eventually that goes, because there's no more dials to turn, no more knobs that you can tweak, no more people you can sort of easily lay off. And the stage after that is when you get into basically capital restructuring and, the private equity and so forth. So we're kind of in the second phase of that. So they're correlated in the sense that when a new platform comes forward and is growing very rapidly, it takes the growth away from the existing platforms, the existing legacy players.
And you bring up a great fact there, in something to really go look at in the blog post itself, is you actually do a diagram there of your typical kind of S curve of supply and demand over, lifetime, going from beginning to commodity. But then you also lay out Jeffrey Moore's chasm of, different areas of adoption, if you will, and you kind of lay them out together. And what you're stating is exactly that, is a combination of those models and then defining them into exact phases. Is that a good way to look at it?
It is. I can't claim creation of that. That was from the company who I've what's the word I'm looking for? I acknowledged, or I gave them attribution. But I do think it's smart in the sense that, when you get when you start moving up the S curve really rapidly is when the mainstream hits. And that's where we're at now, is the mainstream is really adopting, very wholeheartedly. And, so I think that's an accurate observation.
So how do you talk a little bit about sort of historical trends and how things follow patterns. And, the one challenge in corporate IT is, maybe 20% of their budget that's allocated to new projects. I mean, there's always this huge amount that stays there to maintain existing stuff. What do you think drives the big shift towards towards all this public cloud growth? Is it do you think that financial model of IT and the lines of business kind of gets blown up as well, and people stop putting money into maintenance of existing things, or do you just see like an explosion of new applications where funding's going to go? Or like, how, if somebody were to be looking at this, say like as a CIO, and they say, okay, but who's going to pay for it? How are we going to pay for it? What's going to drive the spend? Like, how do you help answer that? Because it sort of goes against, decades of, how money actually gets spent versus kind of what somebody wants to see happen because it's new technology.
Yeah. one thing is that I think a lot of these the earlier cloud stuff was driven out of incremental money coming from other groups. So, it wasn't an IT project, it was a digital marketing project. And that brought forward money, and they funded it separately. It was, and that's a lot of discussion around that. Now we're into the mainstream of IT, and you're exactly right. You sort of confront the issue of, I really want to start taking advantage of all the stuff that cloud offers in terms of the infrastructure flexibility. I really want to take advantage of all these additional services that can, help me build better applications or layer on additional functionality. But so much of my spend is already spoken for. January 1st, a whole bunch of it. And Brian, I think you've really put your finger on something that I believe is going to be one of the big issues over the next 5 years for CIOs, which is, there is no magic pot of money that's going to show up. No leprechaun's going to bring a pot of gold that, sort of says, oh, here's all your incremental spend. You can go do all this cloud stuff and even keep your stuff. So I believe there'll be enormous pressure into IT organizations of saying, you've got to pull spend out of that 80%. We can't afford to have 80% of the budget tied up in systems that aren't delivering the value that we need and are very expensive and very inflexible. Basically the charter to the CIO is going to be like, what are you going to do to take that 80% down to 60% or down to 40%? You've got to find a way to take cost out of that. This is somewhat analogous to, the rise of the Japanese auto manufacturers when they came forward. At first they were dismissed by American manufacturers, said, basically nobody will ever drive a Japanese car. Everybody wants, Cadillac Comfort or whatever. And eventually it became clear that the market was willing to accept that and in fact embrace it. And then, basically said to the American manufacturer, it's game on. You guys have got to, whatever. They had to figure out, how do we manufacture with the efficiency and the quality of the Japanese manufacturers? How do we adopt their practices? And so I think we'll see something very analogous to that. And so that'll be a big issue over the next 5 years for CIOs and IT organizations is, how are you going to pull spend? What's your plan to pull spend out of the existing legacy stuff? Don't give me an answer that just says, well, we're committed and we can't really do anything about it. Let's talk about what we can do with the incremental spend.
Yeah, that makes sense. Bernard, let's talk about the drama in the industry for just a second. AWS and Walmart. There's been kind of a little bit of a tiff here as AWS has certainly grown in prominence, not just in cloud, but just as a retailer over time. And Walmart kind of announced this week that they're going to really start influencing or even going to the point of mandating that their suppliers not use AWS cloud. And they've also made a lot of other things like that in the past to have, vendors have to have facilities near Walmart HQ or how do you think something like this is going to play out going forward? Do we start to see, for instance, the large retailers start to bleed over into technology and infrastructure decisions?
I guess as a initial observation, behaving like that doesn't seem like it's an action taken out of confidence. That doesn't seem like a positive situation for Walmart to be coming out with that. That seems like a very defensive kind of thing, which is generally speaking not good news or not a positive for Walmart.
Sure.
So Walmart is interesting in that, it is big and got resources. It's still profitable. And, it's going to fight back. An awful lot of the other it's not clear they have the heft to fight against them. Even Target, I think, is really challenged. It appears to be from its results. Our economy is in a long-term restructuring of the retail sector for a lot of different reasons, not just Amazon.
So you don't see. So let's take retail, say for example, out of the picture. We've got, automotive companies trying to reinvent themselves, right? do better in-car entertainment, and then you've got companies like Google, for example, who are doing trying to build their own cars. You don't think at some point we're going to see these large companies who aren't technology companies, but look at these technology cloud providers, an Amazon, a Google, a Microsoft, an Apple, as competitors, and look to sort of stay away from putting their bits in their backyard, if you will?
Yeah, I think you're right that there's a natural inclination to say, wait a second, am I collaborating with my competitor? Am I handing revenue over to somebody who's going to use that to compete with me? Absolutely. And another question is, am I somehow turning data over to them, in the sense that they get to see the patterns of my use and can infer what that means for what my customers are doing? And you're absolutely right about that. The key challenge is, I believe, is, let's say you take that position and go, no, I want to do something else. It's like, well, who else do you go to?
Yeah.
To say, I'm going to use that. And as I mentioned, these innovation platforms have now an ecosystem of services. So if you want to be able to have an in-car entertainment / operational system, and you go, and I want to be doing analytics around how many people are twisting their dial while they're making a turn, and I need to, it's a huge amount of data, and it's a huge amount of, you sort of go, okay, so am I going to build it myself? Well, that's a lot of money. Am I going to find a different cloud provider that might be able to do that? Well, there's only a handful. Am I, which of those enemies do I want to, which is the least enemy of those enemies, I guess. It's not an easy question. I mean, this is sort of an implication of, the ongoing shift of our economy, if you want to say it that way. But, basically computing is infusing everything we do. And so, who are you going to choose to be the foundation of that part of it?
Yeah. So you in the post you highlight those big three companies, Amazon, Azure, and Google, and kind of imply I think, without sort of mincing words, like there's going to be a lot of sort of casualties in the IT industry as a result of that, and we've seen industry shift. What about the things that you sort of don't mention? So like you don't talk about things like other kind of established cloud players like a Salesforce or projects, open. I mean, you sort of don't talk at all about open source. And I mean, like, what's your take about kind of the rest of the IT industry beyond those three big companies? I mean, do you see it as sort of bleak for them in the same way that you sort of mentioned HP and IBM, or how do you see the rest of the industry, whether it's kind of more SaaS-based things or open source things, or what's your take on that? Yeah,
well, I think for sure SaaS is going to be, strong, and Salesforce is going to be a very powerful company and going to continue. And I don't, see it going out of business with, based on the big three or whatever. And there's a couple of other players that plausibly could be in that category. If you saw the Magic Quadrant that just came out from Gartner last week, there's for the first time Alibaba was sitting there. Huawei has kind of announced its ambition to be there, and it has the resources, because as you know, this is like, you've got to be willing to spend $5 billion a year every year to be in this game. And so how many players are there that can do that? There's probably maybe two or three more. Salesforce, I think they're going to do well, although interestingly, almost inevitably, as these companies, these AAG and the big players get bigger, they start to look at, are there ancillary services that we should be adding on? And so, for example, I don't know if you guys have looked at the Amazon Chime service, but it provides everything GoToWebinar does at a third of the price. So, that's extending into an adjacent market that, so I do see that. Open source, I think, is very powerful. It's extremely powerful. The question for enterprises is the best way for me to consume open source to be my own integrator, or do I look to a provider like Azure or Google or Amazon that will package up this open source stuff and make it available to me either at no cost or at very low cost. And I get the innovation of the open source, but don't have the operational headache of implementing it and managing it myself. So I think open source has a big thing. And by the way, on that thing about the SaaS stuff, my prediction is that's where Oracle's future lies. I think it probably won't be a strong infrastructure platform as a service player, but it'll be a very strong SaaS player, particularly in verticals. And I think that's got a tremendous business strategy.
Yeah, and they certainly have the account base already, without a doubt.
They have the account base, and they've got lots of money too. So.
Yeah, exactly. Well, Bernard, we're kind of at that point where we're kind of out of time for this week, but we certainly wanted to thank you for coming on again and really kind of giving us your insights there. And I would recommend everyone to please go take a look at both the blog as well as the other links we put in the show notes as well. Bernard, so for those that don't already know how to get hold of you, what is the best way to get hold of you these days if anybody wanted to follow up?
Well, for sure, you should go to my website, which is conveniently enough, bernardgolden.com. And, I'm on Twitter, and you can always send me a DM on Twitter, and my handle on Twitter is Bernard Golden. That's probably the best way. And, I'm easily available. So, and would welcome any input, feedback, etc.
Outstanding.
Sounds good. Well, on behalf of Brian and myself, thank you very much for your time today, Bernard, and thank you everyone for listening, and we'll actually talk to everyone in 2 weeks. Thank you very much.
Thank you for listening to the Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.